Monday, April 15th, market analysis, Stan Ehrlich. Good morning. We are close to making more new lows for the stock market indexes. We have the daily data E-mini June futures contract in front of you. And on Friday, the market did drop into new low ground for a significant number of weeks, about a month, but it closed right smack at that little yellow line, that support line. So it was a little ambiguous as to whether it was going to continue to work lower. But this morning, after a bit of a rally, we ended up making new lows and almost a total new low ever since about March 6th, over a month, 5 weeks. And closing below Friday's lows would just put more little nails in the coffin as far as a down move is concerned. Remember, I'm really only looking for a move down to about 4,900, maybe 4,800 basis the E-mini June futures contract, which I think is going to live long enough to get down there before you roll over into the September. So bearish. We have some decent downside breakouts in the indexes, and the rally, or more than one in the last couple of days, that has developed has failed, and we're keep chewing away at new lows, and I think we're going to make new lows again today. Let's look at the short-term chart, 5-minute on the E-mini. We came very close to the low of Friday, bouncing very slightly at the moment, but here's a little bit bigger picture. So in the last few weeks, we've been stair-stepping our way down, and here we are, very close to the lows. On the spider, the parent, so to speak, which is basically the same, except the trading hours, remember, are significantly different. And so the daily bars, candlesticks, can be and often are bigger or smaller, whatever the situation may be, because of this vastly different trading hours. The spider is 6:30 to 1 o'clock California time. The mini is open 23 hours a day. Now, bearish, looking for new lows. You know I've been talking about this break, which is in progress, in my opinion, for at least 2 weeks, maybe more than that. Next, spider, short-term, 10-minute, very close to previous lows, breaking below this little blue line, a support line, is just going to add fuel to the fire. Next, QQQ. Now it's been holding up a little bit better, but it's not trending anymore. It's going sideways. And that means breaking recent lows, which I believe it's about to do, is going to, guess what, add more fuel to the fire. Next, we've got the same chart, but of 10-minute data covering approximately, several months, going back to November. So you can see how important that blue line is. It's right across the lows ever since February 23, it looks like. So breaking that blue line, we're going to be seeing new lows from February, February 22, and finally closing a little bit of a gap, and then making another set of new lows. My downside objective is in a fairly wide, broad range. It lasts from about the middle of December to the middle of January. That is the support level that I expect we're going to get down to. And for the QQQ, 413, maybe 395, but in the zone there. NASDAQ futures, same commentary. I think it's about to break the bubble, break the support, and start to slide even faster, quicker. Next, same contract month, but 10-minute data, very, very close to a relatively good support line. And we got close to it just a very short, 30, 40 minutes ago. Okay, Russell has already done it. We have seen new lows for the Russell now since February 14th. That is basically 2 full months. We do have support down at 1950, And 1895, which is about where I expect it's going to come down to. Actually, that's a little too low. I'm not sure why I put that down there. That's more like it. So yeah, 1950 down to 1930. Testing the lows that we made January 17th. Next, we're looking at the June bonds. They got to the bottom of the channel. They got oversold. They got into a support area. And I expect to see, in oversold conditions, a little bit below the support area, probably a bounce. Now, I know it's below the bottom of the channel, but sometimes you poke through these things and then it reverts back inside the formation by the end of the day. That's what I need to see. I need to see the bonds come back a little bit and close at least about 114.11 or higher. That would cause me to be a bit friendly. And I think we could stay then in this down channel back and forth. Not necessarily going all the way to the top of the channel, but I can't rule that out because it'll take a week or two and then it'll be, 119 area. I'm not much more bearish on interest rate futures, a bit. And I do expect them to zigzag their way down a bit. How far? I'm looking at 112.5. Maybe lower. 10-year notes. New lows for the move down. The notes are getting a little closer than I expected already to the previous bottoms, which were in October. Now, maybe the notes will end up with a broad double bottom formation when this is over. That seems to be a good potential. Yeah, I wouldn't doubt that. Although that's probably the first time I've mentioned a possible double bottom in notes, but it's coming down quicker, faster, closer to its longer term, profoundly important support area. And I'll put a little bit of my lines in here so we can refer to them later. And that is 106 and a quarter, 08. Next chart, crude, heat, unleaded, and natural gas. So minor new low for a week and a half, double top formation, and what apparently is a potential breakout of the double top, but the current quote is back up above that lowest low between the two highs. And that's not a really good breakout on a closing basis. It needs to be below that low made on Wednesday of last week. Then I'd be predicting another leg down to approximately 82 or a little lower below 82. Not that big a deal. It's a very small formation. It's only a week and a fraction in size. So it probably normally doesn't have a very big effect if it works like it should and could, and I think it will. So I'm modestly bearish on crude, but I just need that little extra weakness to close below that previous low Wednesday of last week, and I think I'm about to get it. So modestly bearish on crude, but natural gas is almost the exact opposite. It's right here at support area, almost to the tick. Even if it makes a minor new low, as long as it comes back up above where it is right now, 1.690. If it closes higher than that, I think we got maybe a little bit of a double bottom. If it doesn't and closes below where we are, well, you got a new low and a new low close, and it's not oversold, so you got elbow room to go down some more. So although there's a chance, I'm going to put the percentage likelihood of that chance at very small, 15, 20%. So I have to turn out to be bearish. New low expectation, down another chunk to about 1.5. Yep, that's about right. Heating oil. Bearish engulfing on Thursday of last week, but it did make a higher high on Friday, so that signal did not work out exactly like I would have expected. Nevertheless, we have a new low today, so the signal, it said we're going to go down, but it's not supposed to go above the high of the signal day, so that banged us out of the short sale. So we're flat. Now, support right here looks like it's going to get tested, and you maybe can't see that very well, so I'll just make it a little bit darker. There we go. And a little bit more to the right, and I think it deserves to be stretched a little bit further, even right about like that. So I'm expecting this support area to be broken and first tested, but when we test it, we might be oversold. So a little bit of a bounce, then we break through it. Got to point out that we got an incredibly great, perfect sell signal on the top of the market back here on February 13th. That one didn't work out too well, but it did make money. This red sell signal on January 1st, the scalp did okay, not great. The overnight probably did okay, but ER3 did not. That's a little red line right there. When we came up for a new short sale for ER3, it just kept on going up, and that's not what I was looking for. So overall, that signal was probably not so good. Next, gold, silver, platinum, and then copper. Gold last year was an incredible one. Sold the top, bought the bottom. That's not a good signal. Lost a little money. Bought the bottom, sold the top, sold the top, sold the top. And I'm so sorry we didn't get a sell signal on Friday. It came pretty close, but no potato, no cigar. So now we go down, but we came back up. Right now, we're about where we opened. It does look like it's trying to top out. I don't like in a bull trend a market that's shot straight up a heck of a lot and then closes below the previous highs. It's going down today some. That's what I expected. I think I said that identical phrase basically on Friday, but I want it to go down to the lows and below the lows, and I think it's going to do that this week. Now, silver is exactly the same. Big rally on Friday. Closing price below previous rally highs. Didn't hold a big rally. Today, we are up above the close of Friday, but not by much. And I do think this is exhibiting more bearish activity, even though we're higher on the day, than bullish activity. So looking for a break. Let's see it start. Not at the moment. Copper. Platinum first. Platinum is down close to its lows, not super close, but closer to the lows and highs, and is doing more or less what I was expecting out of gold and silver. I think we're going to see more weakness. There's a little support area very close, but it's too close. We just came out of overbought conditions and just starting, I think, to slip. So I'm not going to be surprised if we're not back down to, say, 930 or 900 in the matter of the next 2 or 3 weeks. High-grade copper. This pattern worked great, ladies and gentlemen. I did see it a little late. Sorry about that. This is a large 11-month head and shoulder bottom. First shoulders back in May 24th of 23. The bottom of the formation is around the date of October 13th, 23, and a little before and a little after, but the lowest low is specifically on October 23. Then slightly earlier than you would have expected, I thought this last shoulder should have been about a month later, about here, but it was here instead. But the price was right. The timing was a little early. When it broke the neckline, wow, classic, major, high volume, big, no ifs, ands, or buts about it, breakout. 3 days of follow through, your retracement, which should be approximately halfway to all the way back to the neckline, but not below the neckline, and then back up again. Well, we certainly did the trick on the upside. The minimum upside objective has now been fulfilled today. And that's it up here. And we are now trading a little bit below that objective. It's overbought in the last 2 weeks. There are gaps to finish. They started to get closed, but they weren't closed completely. So I'm bearish, but I'm not seeing the beginning of the move. It could work a little higher first. The objectives are met. The market's overbought. It's in a resistance area. Some of my classic combinations I love to see when I'm expecting a turn. This is one of them on the downside, going back up, oversold, in a support area, turn back up again. And that was the retracement of the neckline, back to the neckline. Copper worked, past tense, put it back in the drawer, one formation down again, looked good. Soybeans, oversold since Thursday and Friday and today. Well, it was oversold within the last few days. That's why it's still yellow. The resistance level at the recent rally high is the most important level around where we are. But we're close to low and last right now, almost exactly low and last. The support is almost non-existent, just the previous lows here. And again, I'll put a little line in at that level. So will we get down to that previous low? I think so, and make new lows. I have to point out, I'm really glad, out of soybeans, soybean oil, soybean meal, corn, and wheat, we have 4 out of 5 buy signals at the bottom, if not the exact low day, on 4 out of 5 grains. Next, soybean oil, buy signal, March 1st, almost the lowest low. Nice rally. Now we're turning bearish and moving down, but we're not at a lower low yet. There is a chance the support area will hold again, and we could be developing something bullish longer term, but I don't want to talk about that much. The trend is your friend. Your friend is down at the moment, and I think the support area is going to get tested and broken. We'll see what happens probably this week. Meal, we got the exact lowest low by a tick, and we're about to see almost a new high since that lowest low. Now, granted, it was tested, but we didn't make a lower low. Would you like to call us a double bottom? Maybe. It's kind of close to the previous low. It is approximately 5 weeks from low to low, a goodly normal amount of time. So closing above the high between the two lows, which is at 347.4, would be an upside breakout on the pattern. Today, we're breaking a little bit of a line that's drawn across some important highs recently. And guess what? That line could even be a possible neckline. Now, this is a stretch. Is that a shoulder low on April 3rd? It didn't make a lower low. It didn't come down exactly to the previous bottom, so it's a higher low, but by a very small amount. The timing is about right. The rules are okay, but again, this is a little lower than one would have expected. Excuse me, I would have expected it to be a little closer to, say, 329 area, and it got down to 325. So it could be considered a shoulder. If that's true, today is a big up day. That's classic of a breakout of a head and shoulder neckline, head and shoulder bottom neckline. So that works. Let's see what the next day or two brings. If this is a head and shoulder bottom, ladies and gentlemen, this is how you forecast the minimum upside objectives. You measure the depth of the formation, you grab the stick of the depth of the formation, and you plop it right on the day where the breakout occurred, the bottom of the stick, and that's my minimum upside objective, 371.90. Let's call it 372. That's good. Little line there, 372 off into the future. So probably won't take that long to get there, but at least I put an objective line. Next, soybean, corn, we got the bottom to the exact day. So far sideways. Not much commentary here. Got to leave it alone. Except we did have a bullish engulfing. I believe the top of the closing at 435.5, and that would be correct. So it's a bullish engulfing. I think the high of Friday, 37.50, was above. No, they're exactly to the tick the same. So it's not quite a bullish engulfing. It's missing one tick new highs. Rules are rules. So it's an inside doji, and we're going sideways. No comment. Let's wait. Wheat, we got the bottom twice. Both buy signals are the first one, the bottom at the time on that day, but the next day we made another bullish engulfing ER buy signal, the green ones, on the 7th of March and the 8th, the 8th of March and the 11th of March. So far, no lower lows, classic retracement, oversold conditions. What we now need to do is to rally above the bear trend line, and I'll yank it over to the right a little bit more. That's good. And we'll see what happens here in the next during this week. Probably it'll either break that line or break below support. Next, cattle. And we are on a daily chart rallying today. Finally, a decent rally. We've been oversold off and on for a couple of weeks, and I'm looking for a little further follow through. But the problem is we want to close stronger than where we are at the moment, which is right there at the price marker 173.90. Call it 174. I really would like to close more like 75, 75 and a half, maybe make new highs, 76, to be a little more confident about my bullish expectations. But the fact that it came down into some feeble, not that great support and was oversold for quite a while leads me to believe that probably it's going to rally. And we're going to go to hogs here, and there's something wrong with the data feed today in hogs. I apologize. I've checked on another trading platform I've got, a TradeStation, and the hogs are really a little bit lower on the day. But I'm not sure why June hogs are showing me bad prices. I fiddled around with this quite a while ago. Now, it looks to me like we're having new lows on the stock market indexes, and I'll go back to them in a moment. New lows, and that is exactly what I said 10 minutes, 15 minutes ago. Let's look at the exotics, basically, for the ICE exchange in New York, which is on TradeStation, and the RBOB, unleaded gas, got overbought on Friday, coming down pretty darn good today. Not quite sure if we're going to drop off that much more. Maybe just test the top of a previous small, little bit of a downward slanting channel. Not very profound. These are usually maybe a month or two. A week and a half, yeah, that's pretty small. So what really we've got is a bull market that's overbought, retracing, get overbought again on a rally, new highs, retracing, get overbought again on new highs and retracing. And here we have overbought and maybe just a little retracement. So the trend is up. The trend is your friend. I'm still bullish on RBOB, New York Harbor unleaded gas, and there's a possibility for some short-term, further minor, probably only this week, downside retracement. OJ, I don't know. This thing just won't go anywhere. We're trying to gain some bullish ground again, but it's going sideways in something. It looked like a pennant a couple times. Right now, it's trying, if that's a pennant, to break out of it. We'll see what happens. I got to wait. We got coffee. I don't know. There goes my cocoa habit and chocolate, and also my morning latte. Skyrocketing prices. That's all I can say, except this is no place at all to be buying. We are up to 94, 95 on the RSI, unheard of high levels. Let's take a little look at a longer term picture. And this is the specific May contract, so I can't go back that far in time. But the contract highs, which are not particularly important, so it's so thin back here in November of 21. Yeah, for the May 24 contract, see. We're up near that resistance, that previous high, but I'm not giving it a lot of credence because of it being so thin back then. A little island top also, by the way. But again, I want to see it on the nearby contract to be talking about an island top. Overbought. That's the big deal right now. And that's the legitimate commentary. Way, way, way too overbought. It's about to go down large. Next, cocoa. Can't stop. Around unchanged, a little higher momentarily. New highs for the trend almost every day for a week and a half. I can see only really one exception. New high ground completely for the trend. There is still a chance. I started talking about this broadening top formation, which is very rare. So the likelihood of it being actually a broadening top is slim because they're rare. All I can say is overbought, looking for a retracement, looking for a new short sell signal. Don't have it yet. Next, Sugar, new lows, coming down toward previous lows, decent support level. I'm going to take this line and drop it down so it's parallel with the previous low. That's about right. Well, no, drop it down a little more. Okay. And that line is support. So we might bounce because we're oversold also, and pretty oversold at 15 off of that line. There's a decent chance. So we're going to watch for that. Cotton did on Friday make it to my minimum downside objective. I saw this one coming before it came. Now, there's 7 days from the first shoulder to the high, exactly symmetrical 7 days to the last shoulder. That's a 14-day, not very big, 3-week formation, and that's trading day weeks. 21 days, calendar week. So, breakout, test, measuring downside objective. Friday it got there, finally, and oversold. So what the heck? We're rallying just like you might expect. Will it go farther? Yeah, there's a darn good chance. Very oversold condition, 14. So, how much? I don't know. Let's wait. Next, RBOB. We've looked at it. We've seen it. Now I want to go back real quick to the stock indexes because we're getting into new low ground. E-mini daily broke that little support area I talked about. We now have new lows for the E-mini since this big upside breakout back on February 22. My. Okay, we're on our way. I'm pretty confident about that. And I keep getting these alarms go off that tell me, yes, it's breaking support levels that I, marked earlier. This was I put a marker in there this morning right here, and it just crashed through it here. Yep. Spider, almost there. Almost there for the spider short-term chart 10-minute. The cues are getting closer and closer. You guys have a great trading day. Profitable trading to you. Take care.